I've got Victor Adair joining me live from the trading desk right now. Victor, I've got to come back. We chatted about it today, but it's interesting me that it's still in sort of the mainstream media isn't getting enough press in Canada, and that is the Brexit vote. We saw all sorts of movements in the markets as they anticipate what's going to happen there. But it's an example of this sort of key event, political event, I guess we can describe it, that's going to have huge financial, economic implications.
Well, Mike, certainly in the short term, markets can get very emotional, and when you're very emotional, you can get very irrational. And certainly the UK Brexit vote, which is coming up this Thursday, is a great opportunity to get very emotional. And we did. I'll tell you, it was a long week. The gold price is up $110 from where it was 2 weeks ago, leading into Thursday. Interest rates just falling like crazy all over the world. You and Bob talking about that. And by the way, thanks for having Bob Hoy on. He's pointing out to people, pay attention to real yields, and I think that's a great piece of advice. But here's a take on the UK referendum I don't think we're hearing, and that is this. This referendum is a non-binding referendum. In other words, even if the people vote to leave, there's not some giant pair of scissors come out of the sky and cut all the ties between the UK and Europe. You can bet those 170,000 bureaucrats that you talk about are going to do their very best, to keep things cooking. So I think the markets got very emotional about this thing, but it's not just going to be something that's going to happen, all of a sudden. And by the way, the bookies still say the vote is going to be Remain.
Yeah, it is interesting because I think it's going to come down to who actually shows up to vote. It's very easy to respond in a survey question. Someone telephones you or it's an internet thing. It really comes down to what the voter turnout, what their preferences are. I still think it's fascinating, and I actually don't think it matters which way it goes, Vic. I just think it's going to represent a further chapter in the demise of the European Union. There's so much pressure there. I mean, Greece should have left. Sure. That thing ain't working out there. So, they still have huge financial problems. I think the mishandling, and I don't even have an adjective to describe how incompetent it's been. Mishandling of the refugee situation has created phenomenal political tensions, a huge rise in those kind of anti-immigration parties. No, this is not the end product here at all. It's just another check mark for me on the road to disintegration there.
I agree with that, Mike. And we're trying to navigate markets, and markets get buffeted. Prices go up and down because of all this stuff. I'm making the point. The markets really got emotional this week, but the fever seemed to break. On Thursday midday, and we had a lot of things that were going downturn and went up, and vice versa. I think if there's one market you really want to pay attention to here, it's crude oil. Mm-hmm. Crude oil hit a high there, $51.50 thereabouts, with an extra kick to the upside with the fires in Alberta, supply disruptions in Nigeria, other parts of the world. Since then, prices have fallen about 10% or so. And why I think that's key is, again, go back to Bob Hoy. There's been so much debt issued on the back of crude oil, and a lot of speculators have jumped in there looking for an end to the bear market that we had. We've had a great rally here for the past 4 months. If the crude oil market starts to turn over, I think that goes right to the heart of what Bob was talking about, widening credit spreads, and widening credit spreads are not good for the stock market.
Well, it's interesting. I mean, you certainly called that a few weeks ago when it bumped above 50. You said you kind of had that feeling that might be it for that move. It's certainly been a good call at this point, and a key, obviously, for Canada also. I mean, as I say, so much happening when Janet Yellen pulls in the horns on midweek saying the economy's not strong enough, worried about the Brexit vote. I felt like it was Groundhog Day. They've done that so often. And I just watched stuff just moving around. Just give me 30 seconds on your short-term positions.
On my short-term trading positions, I am short of crude oil. I am short of Canadian dollars. They're kind of the same trade in a lot of ways. I am short of the euro dollar. I own some out-of-the-money puts on gold that are so far out of the money they're worthless. By the way, a huge jump in the speculators getting into the gold market. I got to be watching that. I think it's a little bit vulnerable. And, Mike, just to close, I mean, it's kind of an Alice in Wonderland world here where people rush to put their money in Japanese yen and in government bonds that pay you no money, and they're doing that because they're looking for a safe place to go.
It's unbelievable. Victor, thanks for taking the time.
You bet, Mike.